Good morning and welcome to our live webinar, Architectural and Engineering Industry Trends, Guiding Future Decision Making, hosted by PKF O'Connor Davies. All attendees are in listen mode only. Before we get started, I'd like to go over a few housekeeping items so you know how to participate in today's call. We've taken a screenshot of the attendee interface, and you should see something that looks like this on your own computer desktop on the right-hand side. You will have the opportunity to submit text questions to today's presenters by clicking on the questions button of the control panel. You may send in your questions at any time during the webcast. We have a lot of material to cover, and if time permits, we will make an effort to respond. If we cannot get to your questions, a response will be sent post-event. A copy of the PowerPoint slides, a recording of today's webinar, and links to the architectural and engineering studies will be made available to you via email a few hours after the event. At the end of the webinar, we do have a very short survey which will be prompted, and your response is greatly appreciated. At this time, I would like to introduce Nick Tamvaklis, partner of Architectural and Engineering Practice with PKF O'Connor Davies. Nick?
Thank you, Harleen, very much, and thank you everyone for joining us today. We'd just like to quickly introduce ourselves before we move on to the presentation itself. So I am Nick Tamvaklis. I'm a partner in our A&E practice with 13 years experience working with firms like yours in the architectural, engineering, transportation, and environmental space. I'm also PKF O'Connor Davies' lead partner for our federal acquisition regulation overhead audit rate practice. Michelle?
Thanks, Nick. My name's Michelle Downing, and I'm a principal in our A&E practice. I have over 15 years of experience working with closely held businesses and providing financial and tax advisory services. In addition, I have extensive experience in overhead rate audits, and I also lead the data analysis and production of our A&E studies.
What that means is Michelle is the mastermind behind most of the results that we're going to go over today. So that's us. I'd like to just talk quickly about our team now. So we do have a dedicated practice of over 50 accountants and advisors serving A&E clients. Our team, our whole team provides audit, accounting, tax, and consulting. And when I say consulting and advisory, that's really in the form of M&A deal structuring and due diligence, IT and cybersecurity risk assessment, succession planning, ESG, financial benchmarking, tax strategies, incentives, and the list goes on. We're really a full service firm to the A&E industry. We also take pride in producing our annual studies, which is done by analyzing our client data, surveying participants, and then we aggregate those results anonymously to provide an average picture of the industry. Those are the results that we're going to be going through today. So on our studies, our 2023 architectural and engineering studies represent both regional and national firms, most of which are headquartered in the Northeast section of the US, but have offices throughout the country. All of the firms are employee owned, and they have revenues ranging from 3 to 400 million, and then headcounts of 10 to 2,000 employees. Now, for clarity, these 2023 studies are based on 2022 financial results, but throughout today's session, we'll be reviewing important key performance indicators and metrics, along with sharing observations about how 2023 is trending so far and what the impacts might be going into 2024 as well. Moving on to the agenda. So today's agenda is going to include discussion of net fee income, utilization, profit, wages, and more items, as you can see here. So we'll cover each one of these items throughout the remainder of this presentation. Now, one note is that our full studies include even more information than what you're seeing on the agenda here. But these are some of the more vital and important KPIs and metrics that we see effective management assess on a regular basis, really to kind of keep a pulse on their firm. So we thought that these would be important items to present today. All right. So to start off the conversation about benchmarking, we'll move on to net fee income growth. So this first graphic shows a 10-year trend of net fee income growth within the architectural and engineering industries. So just a note as we're moving through each one of these slides. Throughout the presentation, you'll see architectural results in that blue teal color, and engineering results in purple, just to help you kind of track your particular industry as we're discussing these. So back to the chart here. So unsurprising, really, in 2020, there was a noticeable slowing in growth, which rebounded nicely over the past couple of years. During 2022, you can see that net fee income grew on average by 18.1% for architects and 11.4% for engineers. So just one note here that not all of this growth since 2020 has been organic. M&A transactions have been transformational really over the past few years by bringing new revenue streams into the industry like software, and also very successful synergies to the industry. So you think of the old adage 1 + 1 = 3. So that's part of the growth that we've been seeing over the past couple of years. Looking forward from these results to 2023, many firms are expecting another growth year, with the average anticipating about 8 to 12% increase in net fee income. Overall lower than 2022, obviously, due to some softening in demand in certain areas. But what you are seeing here is an average. So depending on your particular firm's disciplines or sectors that you operate in, this growth could vary. Some sectors are lagging right now, where others are really booming and continuing to boom. So we'll have more on that disparity towards the end of our presentation. Moving on to the next KPI, this is net fee income per employee. So this is calculated by dividing net fee income by full-time equivalents. So full-time equivalents are calculated by dividing your total hours for the year, so direct and indirect combined. Divide that by 2,080 hours, which is your 40-hour work week times 52 hours. 52 weeks per year. And so this full-time equivalent is more representative of your workforce than headcount alone, which doesn't really take into effect part-time schedules if there are any. So net fee income per employee increased in 2022 to over $200,000 for engineers, as revenue growth outpaced increases in those full-time equivalents. For architects, on the other hand, on average, 2022 saw relatively consistent levels as compared to 2021, hovering around $195,000. This 10-year graphic that you see on your screen here, if you do the math, it basically shows a 30% increase in net fee income per employee over the past 10 years across both architects and engineers. Couple just kind of additional comments here. One is that management should really keep a close eye on this, as it can be a very useful metric in budgeting for both revenue and staffing levels. So for example, if your employees are on average producing $200,000 of net fee income, as you can see here for engineers, and you have a goal of increasing your net fee income by $2 million next year, keeping all things else constant, you'll need to hire 10 full-time equivalents to meet that goal. It works the other way around too. Knowing your average net fee income per employee and multiplying that number of FTEs you have is a way to estimate what your net fee income forecasts or projections will be. And just one final note on this particular KPI before we move on is that being able to calculate and monitor this at an individual employee level as well as a firm level is very helpful in assessing individual performance. So that's something to keep in mind during your evaluation cycle. All right, so I'm going to pass it off to Michelle now to get into some conversations around utilization.
Thanks, Nick. This chart shows utilization at the top and profit as a percentage of net fee income at the bottom. These are presented together for a reason. In design firms, not always exactly correlated, utilization can be a significant driver of firm profitability. If you were to see major changes in utilization, profit would roughly trend in the same direction. Utilization represents the percentage of time that is chargeable to projects and can be calculated using hours and dollars, both of which are presented here. Calculating utilization using hours can eliminate the wage rate impact of highly paid individuals. In a moment on the next slide, we'll dive deeper into the spread between hours and dollars and what that means. Profit as a percentage of net fee income represents the percentage of profit a firm retains in the business before principal bonuses, but after staff bonuses. For architects, utilization increased during 2022 and profitability increased from 14.4% to 15.6%. For engineers, utilization in hours held steady, while utilization in dollars decreased a bit, but profit was essentially flat as compared to the prior year. For 2023, we expect utilization and profit percentage to stay consistent with 2022 levels. We are seeing that firms are still busy for 2023, and we'll walk through the profit percentage expectation shortly. Now we'll dive deeper into utilization. This chart shows the same utilization that was just presented on the previous slide. Utilization in hours is the top line, and utilization in dollars is shown on the bottom. One KPI that is not always tracked by firm management is the spread between these two utilization ratios. This spread could indicate whether a firm's organizational structure is appropriate or if some shifting needs to occur. One trend that we see here is that the spread has been widening over the past decade for engineers, with 2022 at a 3.8 spread, which is up from 3.1 in 2021. For architects, the spread shrunk to 2.2, down from 2.7 in 2021. However, you can see from the chart that the architect spread has been relatively consistent around 2.5. What we typically look for is a spread not more than 3 percentage points. Over 3 percentage points might indicate that a firm is top heavy with underutilized, highly paid individuals.
And if I can jump in here, Michelle, so that's absolutely true in what we're seeing. But one thing that everyone should be aware of is that, you know, calculating that absolute number, it can be useful in identifying, you know, certain areas that may need to be looked at again, but it doesn't always necessarily tell the whole story in itself. So if you're over that 3 percentage points, you know, you might have a firm strategy that includes your highly paid positions leading certain initiatives like ESG or DEI, or highly paid positions that focus primarily on business development or M&A. So it's just, you know, it might be an indicator, but it may not necessarily tell the whole story.
Right, that's correct. So we recommend that this KPI be reviewed periodically to ensure that it aligns with your firm's strategic goals. And if it doesn't, it may be time to right-size your organization. On to the next slide. So we just discussed total hours utilization for the firm. This chart presents direct and indirect utilization broken out between principals, professional staff, and support staff for 2022 and 2021. Indirect hours includes PTO, marketing and business development, professional development, IT, accounting, and other administrative time. For architects, principals held steady, while professional staff decreased slightly from 79.2% to 78.4%, and support staff utilization increased from 1% to 2.9%. For engineers, you will notice that there was a shift in direct utilization in 2022, where professional staff jumped from 71.4% to 73.1%, and principals dropped from 49% to 46.4%. Support staff year over year held steady.
Right. So Michelle, what you just explained is in line with what we saw on the previous slide, where we showed that the spread between hours and dollars was increasing during 2022 for engineers. So you can see that here in the decreased direct utilization of higher paid principals.
Yep. And it also looks like we got a question on defining utilization. So we calculate utilization as direct hours or dollars divided by total hours and dollars. And so that will include PTO because I know some firms look at it as available labor. So this breakout by role can be helpful when budgeting different utilization goals or targets by each role. Firms should monitor utilization to make sure employees are spending the right amount of time in the right areas. Targets by role can also help identify employees who may be overworked if their direct utilization is above their target, or those who may have capacity to take on more client work if their utilization is below their target. Next. So this pie chart breaks out the percentage of technical and non-technical employees. Non-technical employees is further broken out between admin, finance and accounting, HR, IT, and marketing. For 2022, for both architects and engineers, technical employees made up approximately 81.5% of FTEs, while non-technical employees made up 18.5%. For architects, marketing employees made up the most non-technical, followed by finance and accounting. And for engineers, it was the opposite, where finance and accounting made up the most non-technical, followed by marketing. This can be helpful in understanding how many non-technical employees you need to support your technical staff. For example, for a 250-person firm, you would expect 12 to 13 employees in your finance and accounting department, which would include the CFO, controller, accounting managers, billing, and project accountants. Now next going to go into the total labor billing multiple.
Before I do that, Michelle, there is one question that came in. If you'd like to address it, is FTE calculated by hours or by scheduled hours?
It's by hours. So we calculated as taking 40 hours per week times 52 hours per week. So we take the total hours divided by 2080, and the 2080 is calculated as 40 hours per week times 52 weeks.
All right, so moving on to the total labor billing multiple. So we mentioned that utilization is one of the more important KPIs for a firm to track, but that ratio is really only as good as its inputs. So what I mean by that is if employees are not accurately recording their time to direct and indirect project codes, utilization could be skewed. So management instead could use the total labor billing multiple, otherwise known as the revenue factor, to assess a firm's efficiency. So this is calculated by dividing net fee income by total labor, or alternatively by multiplying your billing multiple by your utilization rate. Algebraically, you get to the same place doing it that way as well. So this eliminates a potential misclassification error between direct and indirect labor. The revenue factor can tell us if there's enough revenue to support existing staff. When it comes to budgeting, multiplying a firm's expected total labor by its budgeted revenue factor results in a net fee income projection. So for example, if you're budgeting a revenue factor of 1.8, based on your history. And you know you'll be incurring total labor of $15 million based on your fixed salaries for the year. Then if you do the math though, you would expect net fee income to come in right around $27 million. Alternatively, dividing a net fee income goal by a budgeted revenue factor shows how much total labor, not just direct labor, how much total labor your firm should incur to produce that much net fee income. So for example, if you're budgeting the same revenue factor of 1.8, but want to reach 35 million in net fee income, based on that, keeping all things else consistent, you'll need to incur close to $19.5 million of total labor in order to meet that goal. So there are a lot of ways to use this KPI to budget and understand your business. I can tell you if you're striving for a too high or too low of a net fee income goal, or if you're over or understaffed. From what we've seen over the years, firms that are able to get to a revenue factor above a 2.0 typically show a higher profit percentage. So that's the 10-year trend for 2022. Looking towards the end of 2023, we're anticipating that the total labor billing multiple will trend upwards slightly as a result of steady utilization, which Michelle just mentioned, and an increase to the billing multiple, which I'll go into on the next slide. Moving on to billing multiple versus break-even multiple. So here we're going to discuss the relationship between your billing multiple and your break-even multiple. A firm's billing multiple represents the average amount billed expressed as a multiple of direct labor. So it's calculated by dividing net fee income by direct labor. The billing multiple on these charts are represented by the top line. 2022 saw an uptick for both architects and engineers due to continued efficiencies by firms in managing labor. So what this means is that even though utilization didn't increase much year over year as we saw, the direct labor that was incurred was more productive. So for example, on average, more direct labor was billed in 2022 than it was in 2021. You also see this reflected in the revenue factor that we just discussed. So the line presented on the bottom of this chart is the break-even multiple, which is calculated by dividing total operating costs by direct labor. So as the name implies, this is the multiple that you have to attain to break even to cover all your costs. So as we all know, 2022 came with some significant inflation, as well as the recurrence of some costs that were placed on hold during the pandemic. So naturally, the break-even multiple increased, more so for engineers that you can see here than for architects. So if the billing multiple represents revenue and the break-even multiple represents costs, the spread between the two lines represents your profit. So this spread was 0.47 for both architects and engineers in 2022. So this 0.47, just keep in mind, this is per direct labor dollar. So for every dollar of direct labor that you incur, compared to 0.42 for architects and 0.43 for engineers in 2021.
Nick, I just want to jump in here because the billing multiple and the break-even multiple are useful KPIs to consider when budgeting project profitability. So for example, if you know that you need to obtain a 2.73 multiple to cover just your costs and you want to make a 15% profit, you can calculate your desired billing multiple and use that to determine what your fees should be for a project.
Yeah, exactly. Looking forward now for 2023. So what we're seeing is that the billing multiple and break-even multiple for 2023 on average is likely to increase incrementally. So both of them are going to tick up potentially a little bit, maintaining that consistent spread between the two, which is going to result in on average flat profit for 2023 as compared to 2022. The expected increase in the break-even multiple is really a result of continued inflation, even though that's beginning to cool down a bit. But that at the same time, it's a normalization of those costs. So, in other words, those costs have ticked up quite substantially as a result of inflation, but not many of them are going to be decreasing much. They're likely plateauing and staying at that point. However, despite this inflation, we are seeing many firms being able to pass these increased costs through to their clients, which is resulting in an increased billing multiple. Okay, so we'll move on to profit per direct hour. So these charts that you're looking at show billings, costs, and profit, but from a slightly different perspective than what we just discussed on the last slide. It's a different way of viewing it. This is something in practice that we recommend doing as well, is, for your important key performance indicators and metrics, calculating them and viewing them in a few different ways is very helpful to fully understand the impact. So here we're analyzing these metrics per direct hour as compared to direct labor dollar, as we did on the previous slide. So we'll start with the dotted bars on the left-hand side of each one of these charts. These represent your bill rates per direct hour. Architects reached $149 in 2022, which was a 5.6% increase from 2021, while on average engineers climbed to $155 in 2022, which was just north of 7% increase over 2021. The stacked bars to the right of those dotted bars is made up of direct labor and overhead costs, which also include your indirect labor, again, per direct hour. So one observation here is that direct labor has very consistently made up 36% of your total costs for architects and 39% of total costs for engineers over the past decade. So this is very consistent over the industry and over the 10 years here, and it's a useful bit of information that you can use for your budgets. Total costs increased 4% year over year for architects and 7% for engineers. So if you think about these two bars as revenue and costs, the difference between the two represents profit per direct hour, which is displayed at the top of the chart in line format, reaching a 10-year high of approximately $23 per direct hour in 2022 for both architects and engineers. Okay. I'm going to pass this back to Michelle to talk about some components of the overhead rate.
These bar graphs show what made up the overhead rate in 2021 and 2022 by major categories. Your overhead rate represents the cost of non-project related expenses as a percentage of direct labor. It's no surprise that the biggest component of your overhead rate is indirect labor, followed by fringe benefits, which combined represent half to 2/3 of your total overhead in both 2022 and 2021. Indirect labor, fringe benefits, and staff bonuses increased across the board during 2022, primarily a result of recruitment and retention efforts, existing and prospective employees demanding more, and with the lack of candidates in the talent pool, firms were forced to pay those premiums. We expect indirect labor and staff bonuses to hold steady for 2023 as these costs level off, while fringe benefits, specifically health insurance, is expected to increase. Occupancy, which includes rent, decreased in 2022 for both architects and engineers as firms began to reassess their office footprint post-COVID. What we have seen here is firms not necessarily terminating leases early, but reevaluating them as they come due and either downsizing or subletting existing space. Architects tend to gravitate more to major city hubs and in more expensive buildings than engineers who may set up offices in the suburbs. This lends to occupancy making up a larger percentage of overhead for architects than engineers. For 2023, we expect this to potentially decrease again as firms are still in the process of reviewing their office space and evaluating their needs. Going in the other direction is computer and IT, which increase for both architects and engineers as due to increases in cybersecurity protections and a shift towards cloud services. Professional fees have held consistent for engineers, while professional fees decreased slightly for architects. Insurance held steady for both architects and engineers. And for 2023, we expect insurance to increase as fees have been steadily rising.
Hey, Michelle, before we get to the other category, there are a couple questions that maybe we can address. The first is what's included in employee and fringe benefits?
So that includes health insurance, retirement plan contributions, which could also include 401k matches and payroll taxes.
And the other question is just going back to the full-time equivalent. I just want to make sure that we address that. The question is, so if an employee works 20% overtime, they still count as one full-time equivalent. So the 2,080 hours, so that's your 40 hours a week standard work week times 52 weeks per year. That's kind of the definition of a full-time equivalent. So if someone works more than that, the math works out that they're 1.1 or 1.2 of a full-time equivalent, which someone works less than that, they might be a 0.7 or 0.8 full-time equivalent. So the full-time equivalent is meant to transform your workforce and the actual hours that people are working, whether they're part-time or they work overtime, into a kind of a standard across the board, so it's easily understandable.
Right.
Hopefully that explains it. Yeah.
It is important to note that you need to make sure that employees are recording and including all their time on their timesheets, because if they're not, then that may skew those results. And then there was another question that came in. Do you count cyber insurance in computer IT or in insurance? And we include that in insurance. All right, so jumping back to other costs, this includes office, travel, depreciation, recruiting, and marketing. And that decreased from 19.6% to 15.7% in 2022 for architects. And the biggest driver of this decrease was telephone and miscellaneous costs. For engineers, other costs increased to 16.8% in 2022 from 15.2%. And the biggest driver of this increase for engineers was recruiting and admin travel. For 2023, we expect these other costs to remain fairly consistent with 2022. The overall composition of your overhead rate over time tells a story as well. It has a direct effect on your firm's profit margin. So understanding your historical costs can be extremely valuable in estimating future obligations. One approach you can take in connection with budgeting costs would be to calculate specific items as a percentage of something else, perhaps revenue or headcount, for example. So consider computer and IT. These costs can be correlated to headcount, as these costs would increase or decrease in connection with staffing needs. Professional liability insurance, as another example, would be tied to revenues. Budgeting costs is a way to establish a bottom-up budget versus a top-down approach of starting with revenue projections, and can often be more precise. So now let's dig a little bit deeper into compensation costs. This chart presents the average direct, indirect, and combined hourly rates. The average hourly rate is calculated as labor divided by hours and does not include bonuses. They represent the amount your firm pays for direct labor, indirect labor, and total labor for every hour worked. In 2022, costs continued to surge, although at a lower rate than what was seen in previous years. For architects, the combined labor rate, which is the dotted middle line, rose from $45.74 to $48.11, a 5% increase. And over the past decade, this was a 30% increase. For engineers, the combined labor rate, which again is the dotted middle line, rose from $49.57 to $51.09, which was a 3% increase. Over the past decade, this was a 23% increase. In regards to 2023, we expect the combined labor rate to increase around 5%. Next slide. So this slide shows the 10-year trend for raises as a percentage of salaries. As you can see, over the past decade, the pay raise percentage held relatively consistent between 3.5% to 5% for architects and 3% to 4% for engineers. Then in 2022, we saw a jump in the average. In 2022, the pay raise percentage ranged from 3% to 11% for architects and 3% to 12% for engineers, with the average coming in at 6.5% for architects and 6.2% for engineers, which is the highest average over the past decade. With more work to do and fewer people to do it, the competition in the labor market has resulted in firms having to make significantly higher adjustments to salaries and bonuses, which you'll see on the next slide, to retain this talent. For 2023, we do not expect to see this record high again. Therefore, we expect this to decrease slightly to around 5% to 6%.
And on that, what I'd like to mention is one thing that we've noted here is that towards the beginning of 2023, firms were anticipating similar raises to 2022, what you're seeing on this chart here. However, as the year went on, firms have adjusted this and are giving slightly less, resulting in that 5% to 6% range, and potentially even lower than that towards the end of the year. And then looking even further into 2024, there are a lot of indicators and signs pointing to a continued downward trend, getting back to the kind of normalized area that you see over the previous 7 years on this chart.
Slide. So this presents bonuses as a percentage of salaries over the last decade. For 2022, the bonus percent was a wide range for architects, with a low of 2.5% to a high of 24%, with the average coming in at 10%. 2022 was the highest average bonus percent over the last decade for architects. For engineers, the bonus percent range was not as large, with the low of 4.5% to a high of 15%, with the average coming in at 8.2%. You can see that the bonus percent has had a continuous upward trend over the years as staff retention is a continued focus of firms. In regards to 2023, we are still seeing healthy bonuses and expect this percentage to be between 8% to 10%. And looking at your average hourly rates, pay raise percentages, and bonus percentages are useful to track the historical change. But we also recommend looking outside of your organization at the industry as a whole, along with any significant economic factors that may be present in any given year. Although using historical trends is a good starting place, you don't want to fall into a trap and continue what you've historically been doing when your competition is awarding higher percentage increases.
So one other thing I want to jump in here and explain is in that I'm sure many of you are already aware of this, but another thing to be cognizant of is your workforce composition. And what I mean by that is the younger generations tend to prioritize cash over benefits like 401k matches, for example. And this is really, it's to help offset other high costs in their lives, such as buying a home, starting a family, paying off college debt, living in the moment, daily Starbucks, whatever the case is, from these generations. But they really do tend to gravitate towards cash versus, retirement plans. So that's just something to keep in mind. We're looking at an average here, but it may vary differently depending on the composition of your team. All right, so I'll take it over from here, Michelle, and go into the staff turnover ratio. This is a wild ride of a chart, which I'll try to add some color to. So this staff turnover ratio represents the percentage of employees who have left voluntarily and involuntarily compared to total employees. So this does not represent employees who were replaced. Over the past decade that you're seeing here, if you average all of the percentages, it's basically a 12% turnover rate over the past decade. Within our study participants, during COVID, there was a noticeable difference between architects and engineers with respect to turnover, which you can see in 2020. So architects who were more likely to benefit from the Paycheck Protection Program made a business decision on average to retain staff for as long as possible, resulting in a low 8% turnover ratio during 2020. However, what you see in the following year is kind of a correction for that business decision, with architects experiencing a higher than average turnover of close to 14%. For 2022, turnover in some firms within our study was as high as 30%, which is extremely high. Staff turnover ratios remain on the high side in general, continuing the pressure for firms to focus efforts on retention strategies. As everyone knows, it's very expensive to replace talent. So in regards to 2023, where we currently stand, we're expecting the staff turnover ratio to come down slightly and normalize around that 12% average, potentially a little bit less than that. So this is one area that's important to track over time. It can be very useful in determining your potential turnover next year. The ratio should be considered when you're budgeting your FTE goals so that you don't end up short on those targets if you're expecting a sizable turnover. It also helps with budgeting that effort that goes along with onboarding replacements. In a few moments, as we start to wrap up the presentation towards the end, we'll discuss a few considerations related to reducing this turnover ratio. Moving on to DSO. So this stands for days, fees, and accounts receivable. DSO represents the average collection period for a firm's receivables. What this chart shows is that DSO has been trending consistently downward over the last 10 years for both architects and engineers, which is a great thing. Adds to working capital, adds to cash to meet your obligations. It's important to note, though, that this is an average, and DSO is impacted highly by your profit mix, such as how much public versus private work you do, whether you're a prime or a sub-consultant. So all of these things can influence this ratio. In addition, how you get paid, is it by check, is it electronic payment, can also have an impact on your DSO as well. So firms can calculate this in various ways. The key here when you're analyzing this in your firm is to keep your formula consistent from year to year. So regardless of how you're calculating it, you can identify the trends over time, which is the important thing here. So DSO can be very useful in budgeting cash, but it needs to be monitored for other impacts as well. So for example, enormous decrease in your DSO seems like a great thing, and it is in many ways. But if you're for instance, a cash basis taxpayer, in that huge influx in cash during your year could have an impact on your taxable income. So managing this in a way that doesn't have repercussions on other areas of your business is one of the key takeaways here. For 2023, go ahead,
Nick,
Michelle.
I just wanted to jump in quick. So there was a question about if this DSO is billed or totaled, and this is billed AR.
Billed, yes. Just the last comment on this for 2023, we're expecting this downward trend to continue or to hold steady. There's no indications, at least at this point, that DSO is going to start to take longer overall on average within the industry. Okay, moving on to working capital as a percentage of net fee income. So working capital as a percentage of net fee income is an indicator of whether a firm has retained a sufficient level of capital and liquidity to fund its operations. So if you look at this chart in 2020, there was a significant increase in working capital in the industry. So this was a combination of PPP for firms that did receive it, and other firms placing excess cash in reserves just in case something happened because of the uncertainty. Throughout 2021 and 2022, as firms began to realize that they may not need to maintain such a high level of working capital, they began to tap into those reserves to pay higher wages, like we talked about, deal with inflation, like we discussed, and also to invest in initiatives that were placed on hold during 2020. Typically, firms with working capital of 20 to 25% of net fee income have shown that they have the financial flexibility to manage downturns without incurring additional debt. This is really the benchmark that we recommend maintaining to our client base. And as you can see here, both architects and engineers were in a good position at the end of 2022 going into 2023. A final note on working capital is just to be cognizant that it's not just the number that you should be assessing, it's the quality of working capital that's also important. So if you calculate a working capital percentage of, let's say, 25%, but that includes accounts receivable that you might not collect, or a WIP that you might not ultimately bill out, that working capital number in itself may give you a false sense of security because those assets may not convert into cash. For 2023, we're expecting working capital as a percent of net fee income to decrease, partly, and we're not going to go into this in detail during this session, but partly due to large amounts that firms have had to pay in cash due to the tax law change, Section 174, and the capitalization of R&D costs and the impact on taxes. So again, we won't go into that on this session. We will have other sessions on that topic, but we've seen, over the past year that has been a tremendous stress on cash and on firms, depleting some of those working capital balances. Okay, I'll pass it on to Michelle to go into some of our IT statistics.
Thanks, Nick. IT costs are comprising more and more of a firm's budgets as costs and sophistication increase. This chart details our study participants' percentages of certain IT areas. So starting at the left, more architectural firms outsource their IT at 41%, while only 17% of engineering firms outsource IT. And what do I mean by outsourcing IT? That's firms are paying a vendor to help with their IT functions. The next bar graph is showing that most firms have cyber insurance. This is no surprise based on the environment we're living in today and the constant attacks and breaches we hear about. In regards to IT budgets, 62% of architectural firms have formal IT budgets, and 83% of engineering firms have them. Of those firms with an IT budget, 63% of architects and 45% of engineers have a dedicated cybersecurity budget. Also included in our studies, we have even more IT statistics, and those show that most firms are conducting security awareness training and have cyber insurance, which we've just discussed, as baseline risk management. However, only 50% of architects and 63% of engineers have documented incident response plans. So as we've noted, your IT environment is becoming more complex and IT costs are continuing to increase, and firms should continue to monitor this area. Now, Nick's going to spend a few minutes on looking ahead.
Right. So thank you, Michelle. So we've talked about where 2022 ended up. Talked about a few areas where 2023 has been trending. Now we just like to talk a little bit more generally about the remainder of 2023 and what we're seeing within our client base in our studies moving into 2024. Sustained growth, there's still a big demand for all of our services. Backlog is hovering around record highs, about 7 months for architects on average and about 11 months for engineers. In some cases, close to a full year of future revenue. The sustained growth is expected over the next 5 years, albeit it's projected to be at a slower pace than the past few years. One important factor, though, is that growth will be dependent on your particular firm's concentrations, as you all probably know. There are concerns right now in the commercial real estate and development markets, partially due to high interest expense of funding these projects. However, on the other side, roads, bridges, schools, solar, data centers, warehouses, clean water, healthcare, these are all sectors that are continuing to fare well with no significant slowing down projected. Economic concerns are here to stay. The AIA's Architectural Billing Index for September of 2023 came in at 44.8. So this decreased pretty steadily over the previous few months from July. And it came in at the lowest score reported since December of 2020. Trending the other way, though, in a way, is the ENR Construction Industry Confidence Index for Q3, which was 46, up 6 points from Q2, but it's still below 50. So, this index, similar to the ABI, it really kind of measures sentiment about where the market will be in the future, and it's on a scale of 0 to 100, where a rating of above 50 shows a growing market. So architects and engineers currently are below that 50, even though there was some improvement on the engineering side, but so it shows some concerns for the economy. Geography is also a big factor. The Midwest is currently the strongest region throughout the country for both architects and engineers. And then on inflation, even though it's recently tapered off, firms are still pessimistic about it, as well as the lack of labor, interest rates, which are expected to increase again as the Fed navigates to their 2% inflation goal. On employee recruiting and retention, this is always a top challenge. It's still the #1 concern for firms, finding and keeping talent. But the big problem that we've been seeing, and I'm sure your firms have seen this as well, especially post-COVID, is mental health and stress, with the majority of instances affecting individuals 40 or younger, really this next generation of the firms. So firms should focus on employee retention by increasing wellness programs, professional relationships, incentives, providing more training, technical development, and then also clear paths to promotion. We've seen that these, our best performing firms and clients have a focus on all of these areas. Then finally, advancements in technology. There's a consensus out there that AI will be on a similar scale to the introduction of automobiles, electricity, and fire. But then there's also other beliefs out there that since AI will generate results based on a tremendous amount of data, that those results will just be average, nothing special, allowing firms to stand out from others. Regardless, though, Goldman Sachs has recently come out and projected that 1/3 of current tasks could be automated with use of technologies for the A&E industry. And then a June 2023 AIA study found that no more than 10% of firms are currently using AI on a daily basis, but that 90% expect an increase in AI use over the next 3 years. So obviously, advancements in technology may be, the key to continued profitability in many ways, not only completing projects quicker and easier, but potentially also as a new revenue generating product. So embrace these new technologies. It can be hard, but one thing that we do recommend is that it's consistently a current and recurring board meeting agenda, just to make sure that your firm is at least talking about it and that you're not lagging too far behind your competition. Okay. We're going to wrap it up now. Michelle has a few final comments before we end up the presentation.
So today's presentation was just a glimpse into our studies. We invite you to visit our website for the full versions, which also include information on billing rates, salaries, and other useful information. We're also looking forward to our annual A&E our A&E Summit next June. This event gathers CEOs, CFOs, finance and accounting teams, bankers, attorneys, and other A&E industry stakeholders to discuss current affairs that affect the industry, growing trends, and future opportunities. During our 2023 summit this past June, we welcomed economist Dr. Anirban Basu as our keynote speaker, presented a preview of our study data, and held a panel discussion featuring leaders from across the country. It was a great event, and we hope to see some of you there next year. And just
Michelle, we do have maybe 1 minute. There are 2 more questions if you can maybe take a shot at answering them quickly. The first is, do we have any insight on remote versus hybrid work environments?
Yes. So I have the studies here. We do include a stat on the number of days employees are required to be in the office. For engineers, 64% are requiring no days to be in the office, while 18% are requiring employees to be in the office for 5 days. And for architects, 29% are requiring no days to be in the office, while only 7% are requiring 5 days to be in the office.
And then the last question, if we do have time, is do you know what % of surveyed firms are utilizing AI-based tools?
So
And I don't
do
think
not
we have that. Yeah.
We don't have that data for 2022, but that is something that we are asking and including data for in next year's study. So stay tuned.
Okay. It is 11:59, so we will conclude. Thank you, everyone, for joining today. Harleen, I don't know if there's any closing comments on your end.
Absolutely. Thank you, Nick, for passing along, and thank you to our speakers, and thank you everyone for attending today's webinar. Please remember to complete this short survey prompted at the close of this webinar. A copy of the PowerPoint slides, a recording of today's webinar, and links to the architectural and engineering studies will be made available to attendees via email within the next few hours. Thank you, everyone, and have a great rest of your day.
Thank you.